Hey traders, Akil here, and in today's video I want to walk you through a trade that we took in both our syndicate program and in our live room from start to finish. It's a pretty decent trade. It's based on structure analysis, advanced pattern formations, and we also do a lot of talk on trade management and trading psychology as well, so I think you guys are going to enjoy it. But before we hit the charts, I do want to say if you are a newer trader, if you're new to this channel and really new to trading in general, and it seems like there's a lot of information, maybe a lot of terminology, the speed of what's going on seems really fast and you just can't stick with it, that is 100% okay. You should not expect yourself to get everything right now at this point in your trading. Rather, you should be trying to take in what you understand and really work on the learning process. Trust me, I've had a lot of experience in this market, a lot of ups and downs, and really all of the trading coaches here at Trade Empowered, if you combine our experience of both trading and teaching, we have well over 60 years. So it's going to come a lot easier to us than it will to you at this point. And again, that's perfectly fine. My suggestion is if you are interested in this style of trading, if you do want to learn more, if you want to get better at it, invest in some education. It doesn't have to be paid education. It could be stuff like signing up for a 1-week trial in our live trading room. We have a London live trading room as well as a New York live trading room, or taking advantage of the month offer in our syndicate for $1. That way you get to sit with us as we do this analysis live each and every day and get those repetitions that are needed to become better at it. So just a thought, our Trade Empowered offices are going to be closing pretty soon, so you certainly want to take advantage of those offers while they're still here. So hope you guys enjoyed this video, and as always, do me a favor, if you like what you see, hit that like button. Please share this with another trader, and if you're new, first time checking out this site and you're not subscribed, make sure you subscribe. That way you don't miss our next trading video. So I'll see you guys this weekend for the Forex market preview, and enjoy.
All right, syndicate members, good morning. We're trying this again. This is my third attempt. We've been having volume issues. I'm still trying to figure out these quick hit videos. I know you guys like them, but it's hit or miss on whether it actually gets recorded or not for some reason, but we'll figure that out. But here is a look at the Aussie Canada trade I shot into the trade floor a few minutes ago. And there's a few things that went into this trade. The first was a retest of structure. Now I have my DSR levels on. This is something we were discussing in yesterday's private Q&A with our transformation members, of using multiple DSRs, using a major DSR and a minor DSR. So right now on the Aussie CAD 4-hour chart, I'm using both a major DSR and a minor DSR. You can see they're both lining up in this level right here. So what price action did was we came down from our highs and double bottomed, creating a level of structure support. We then bounced off that level, and now we've retraced, hit that level, we've consolidated. You'll see this as actually a double bottom when we go down to the lower time frame. We've consolidated, we've rejected off that level, and now we're coming back for one more test. So this is essentially, it's a bigger double bottom, or a smaller double bottom within a bigger double bottom, which also features a 2618 trade. Now, all that aside, simply put, we have a retest of structure. That's at least the way I look at it. You could be, depending on if you're a 2618 trader, you may see one thing. Depending on if you're a CTS trader, you may see another thing. I'm looking at this as a level of structure that was hit and held previously, and I'm looking to take advantage of the second test. And what I did was I identified this level this morning. Again, price action hitting our previous level of support. We had continued divergence on the RSI. For you guys that were in yesterday's training, remember, divergence on the RSI doesn't necessarily mean that the pair or price is going to reverse. But when we're going through that CTS, that combined technical score, it's one of the clues that we can add to try and put the puzzle pieces together. And I'm sorry if I keep referring to the Q&A yesterday because it's fresh in my mind. I know many of you guys were not in it, but we had a nice little discussion about CTS trading and really how to put the different elements of technical analysis into something that's actually tradable. So anyway, here's what I did. All right, so I looked at this. I wanted to get involved down at this level, and I went down. We were a little bit past the retest of structure, and I went down to the hourly time frame, and I also found two advanced pattern formations. So we're getting almost everything here. I found a Gartley formation. If I take my swing low to swing high, X to A to B, B to C, and C to D right down here. I also found a cipher formation. If I take the same X and go swing high to swing, or swing low to swing high, X to A to B, B to C, and C to D right down here. So double bottom, 26.18, Gartley, cipher, all lining up in the same area. And I got long right at market, which ended up being about 98.70s, 98.75. Now, I'm looking for targets based on the structure trade, not based on this Gartley formation. So you can see I'm looking for a move up into previous structure right about here, 99.17. Stops are below our previous level of structure support. Now, in the syndicate, if you guys are new, we take a one in, one out approach, meaning we only trade one contract, meaning everything comes off at the stop loss, everything comes off at a single profit level. For me personally, though, I trade with two targets or multiple targets, and here is where I will be looking for secondary targets. I initially looked left and I saw this structure level and said, hey guys, or hey Akil, talking to myself. If price action continues up, where are we likely to go next? And I saw our nice DSR level right here. And I said, well, that's a good place for an outside return. I then looked to the right and I said, you know what? There's a very psychological number here in the dollar even handle. So I probably don't want to be right above that at $1.05. I'm going to be a little bit below that in the 99 areas. I then, and this is a trick I like to teach the traders I work with, I then use a little trick I call think like the other trader. So what else would I need here to create a good shorting opportunity? Well, I have structure, I have even handled number. What about Fibonacci confluence? So I took my Fibonacci retracement tool, went from swing high to swing low, and I said, you know what, look at that. There's a 618 Fibonacci retracement there as well. Well, what if I take my Fibonacci extension tool, swing low to swing high, and back down? What do you know? There's a 1618 Fibonacci there as well. So we have the golden mean of Fibonacci's. The golden mean is the 618 level, and the inverse golden mean is the 1618 level. So we have the two golden means lining up with structure, lining up with a high psychological number. Probably a place that I want to get out of the market. I don't want to fight that through. So that's where I have my personal second targets. So we'll see if that gets filled. So hopefully this makes up for, hopefully this gets you this time and there's actually volume. I know Charles is not doing a war room today, so hopefully this will whet your appetite until he returns. So I'll see you guys in the live room in about an hour or so. Until then, plan your trade, trade your plan. Let's have a great start to our week, gang. Yeah, you can see it clear on the 5 as well. Come on. All right, let's roll stops down. Give me a second, guys. $72. I don't have the right screen on here. Sorry. We're going to roll these stops up to 72. So you can see they're right below break even. We got initial reaction. Again, we have Canada. What came out for Canada? Tell how much I care about news, right? All right. So no real reaction. So we'll put this to the side. Stops are rolled up to 98.72. So you can see right now I've got about 3 pips of potential risk. Woo! Right? How do you think that makes me feel as a trader? You think that gives me a little bit more confidence to stick with this trade and not take targets early? Yeah, right? Now, for some, it may make you scared. You may say, oh, well, my stop loss is closer, so I may get stopped out now. And that's going to be the risk of rolling stops, right? If you're going to roll stops, yes, you reduce risk. You also put yourself at higher risk of getting stopped out because your stop loss is higher. Again, everything in trading is a pro and a con. Everything is a give and a take, right? There's no one magic system or one magic way to trade that works, right? If you gain something somewhere, you lose something somewhere else, right? It's complete balance. The market stays in balance. You guys understand me? So never go in thinking that this one way has to be the only way to do it. You're sacrificing something else. In this case, in order to roll your stops, in order to reduce your risk, which is a good thing, you put yourself at more risk of getting stopped out. Because guess what? The market can now do this.
That. And are you still in the trade if that happens? No. You're stopped out. And then the market went on to hit your targets. Oh, man. Man, my prediction was right. I knew it would get there. Oh, coulda, shoulda, woulda. Right? However, if the market does this, right? Market does that. Well, now you took a 3 pip loss versus a 35 pip loss. Pros and cons, right? The key is be comfortable and confident with what you're doing. Whatever you're doing, be comfortable and confident with it. And stand by your decision. Don't second guess yourself. If this thing gets stopped out, don't sit there and be like, oh man, I should have left stops the way they were. Because the next trade that shoots down, you're gonna say the same exact thing, right? Oh man, I should have rolled stops and reduced risk. You can't be that hindsight trader, right? Someone said this yesterday in our private Q&A. If you're chasing something, you're always behind. If you're chasing something, you're always behind. Don't be that trader. Have confidence in your ability. Trust what you're doing. Know the reason behind what you're doing. That helps build the trust. If you know why you're doing it, it allows you to have more confidence in it and stick by your decision. All right, so we got orders on euro dollar. Any questions about euro dollar before we move on to the next pair? We're gonna head over to the cable next. We're still watching Aussie Canada. We're retesting previous structure highs for you guys. Again, stops did get rolled up. Let me just update that to the syndicate. Where you at? Syndicate. Trade floor. Roll stops on Aussie Canada to 98.72. So we'll see if we can put together some new structure highs here and get this. Now again, syndicate, I am taking everything off here for our syndicate. I just want to show an example of what it would look like for secondary targets. That's why I have it split up like that. Joe says it's so tempting to see price close at those. Yeah, it is. You know what? This is one of the hardest things you can do. One of the hardest things you can do is sit here and just look at it like this. Man, we're 3 pips away. Would anyone really know if I just stopped by 3 pips? 13's an unlucky number, so I probably should just take it out of 13 because it would be unlucky. So psychologically, the market probably doesn't want to push past 13 because everyone knows it's an unlucky number. We did get a hold here on the last spike. You can see the last highs are at 99.13. Now we can't get past them. Today is Tuesday. Tuesday starts with a T. 13 starts with a T, right? That's not a coincidence. It's not a coincidence, right? Best thing you can do is this, right? Go to this little minus button up here, this little thing that says minimize. Watch this magic trick. Pow! It's gone. It's gone, right? That's the best thing you can do. Just don't look at it. You have your stop set. You have your target set, right? Just try not to watch it. Try not to watch. Now you do have to watch it to a certain extent because you gotta roll stops to break even if your targets are hit. But try not to be the angry trader, right? Remember that video that Darren did, the angry trader video. Try not to be that trader, and just focus on analysis for another pair. If you have your you can set alerts. So if price hits that level, you get a little ding, or you should hear, if you have the Ninja Trader lady up, you should hear the order filled. That lady say something, but it's tough. It's tough watching these things, which is why you don't want to do so. Think of it as a test. This is just a test of professional trader versus average Joe. Average Joes are going to make the habit. Average Joe, and Joe asked the question. That's funny. Average Joes are going to make the habit of stopping themselves out early. Pro traders are going to stick with it. They're going to deal with some pain. So just always remember that. And the more experience you have, the easier it will be. But if you get in the habit of taking profits early now, this is what my buddy did. You get in the habit of taking profits early now, right? Now it's 4 pips, right? That's not a big deal. But guess what 4 pips turns to next time? 4 pips turns to 7 pips. 7 pips turns to 17 pips. And before you know it, if you're like my friend, you start consistently taking profits off. halfway to your targets every time. And you leave 500 pips on the table each month. So think about that. I think I did a pretty cool video on that too. I'm not sure. Let me see if I can shamelessly plug my YouTube account real quick. I'm sure I can. I'm pretty good at shamelessly plugging myself. There's a video I did on my YouTube page, right? Akil Stokes, right? Or Trading Powered FX, either one. Let's go to the Trading Powered one. Go to Akil's video playlist. I swear I did one on kind of like this, eliminating small mistakes. There's a FOREX market preview on that. Not the same. Not the same, but it talked about really just how small mistakes can add up to really big profit errors. We did say like, hey, blah, blah, blah. If you lose 25 pips a week, it ends up to 12,000 pips a year and stuff like that. So that's a good video to watch if you kind of want to see the downside of taking targets off early or making mistakes in your trading. All right, Euro Yen daily chart. Identify what have we just done. I'd actually go a little bit lower, about 122.79s here. Come on, baby. Woo! Real quick. Target one's hit on Aussie, Canada. Sorry to disrupt the program. Let's give ourselves some love. Woo! Oh yeah, oh yeah. Ka-ching. Right? Good 42 pips on that. Move our stops to break even, just above break even. Right? And let's see if we can get target twos achieved. Nice. And all you guys were scared about watching it, right? Watching it go around that devilish 13 number. You see why we stick with the trade? You see why we stick with the trade? Confidence in yourself, guys. Yes, it's only a 3 pip difference, but it's the long-term lessons. Trust me, it's the long-term lessons. It's the confidence in saying, man, I looked at this trade. It held at that level for so long. I was so scared. I wanted to get out, but I didn't, because as soon as it took me out for break even, I was going to shoot Akil a nasty email saying that you lost me money. And now you had to delete that message. Why? Because it went and hit your targets. And guess what you gained? You gained confidence. And it's not about the money, right? You'll forget all about the profit earned from this trade in no time. You'll forget about the $42 you made, the $420 you made, whatever, the $80 you made, whatever your position size is. You'll forget about that shortly, right? Because you'll have another winning and losing trade that will take the place of that. What's going to stay with you in the long term is the confidence gain, because the next time, and there will be a next time, the next time you see a trade like this and you're sitting there and it's right underneath your target level and you're getting scared, you're getting nervous, your brain is going to think back to that previous trade and say, well, this happened before. And the last time it happened, I stuck with it. And when I stuck with it, it ended up hitting my targets. And that's the little bit of boost you're going to need to stick with that next trade. And that's how you become a consistently profitable trader. You continue to gain confidence in yourself. You continue to gain confidence in your plan. And you become robotic. You let those emotions stay deep down. And you just trade. You just trade. Trust yourself. So good stuff right there. Good lesson. Woo! Do the money dance. Now, let's get back to our euro dollar trade. Let's get long here. Let's get long here at market euro yen. Excuse me. Let's get long here at market euro yen. I'm long at 122.28. It's going to get stop losses down here at our 93 level. All right, traders, so we're back. It's around just a little bit after 9 o'clock, still on Tuesday. I didn't have time to record this earlier. The wife was at a meeting, so I had to watch the kid, but ended up getting stopped out on the trail position of our Aussie Canada trade. Let me just, we're doing a kind of a meeting with our developer earlier about some new software we have coming out, so don't mind the nastiness on my screen. Give me 1 second. All right, clean as whistle. So you can see we did have news come out for the Aussie dollar tonight. It was a GDP, and as we talk about all the time, that when you have news events in the Asia session, so think especially Aussie news, New Zealand news, typically the market reacts a little bit more than it would, say, during a London session or a New York session, just because the markets are thinner, which essentially means that not as many traders are trading. It's not as active. So there was a big miss on the Aussie GDP number. We saw weakness in the Aussie. You can see the big red candles came down, stopped me out for break even on the second half of my position. So was still able to make about 43 pips of profit on the first half. Unfortunately, did not make anything on the second half of my position. And I know we talked about this in the live room today. I'm not sure if I'm going to end up putting that part in this recording when I upload it to YouTube. But we talked about how there's a pro and a con to everything. In the room, we were talking about entry techniques, whether you're aggressive or conservative, how there's a give and a take. Same thing with taking multiple targets or taking a single target. In many cases where the market expands and you're able to catch those bigger moves, for a trader that's taking multiple targets, meaning they're splitting their position into multiple parts and taking half off at one level, maybe half off at another level, and you can break it up however you want, but taking it at different places, you have a chance to catch those bigger runs and make extended targets when the market makes those type of moves. However, in a situation like this, you know, something like we did in the syndicate where we're only taking a single position, well, because we're taking a full position off at that one target level, it's going to end up producing more profit than what I made personally because I'm splitting it up in half and got stopped out on the second half of my position. So always a good example to explain that. We get the question all the time, what's the best way to go about it? Whether it's position sizing, whether it's how you manage your position, whether it's entry techniques, whether it's trading strategy. And the answer is always going to be the same. There is no best. Everything has a give and a take. It's all about what's best suited for the individual trader. And when traders come through our course, that's what we try to do. We don't try to teach them one specific thing. We try to give them options and then really, work those options with the specific trader's personality and what they want to accomplish and find the mix that's going to work best for them. So glad you guys got to see a good trade. Wasn't as good as it could have been, but we're not just trying to show you the super trades. We're going to show you the winners, the losers, and the break evens as well. As long as there is something beneficial that you can get from the video, whether it's psychological or whether it's on the technical analysis side of things, then it's worth uploading. And hopefully this is helpful. If so, leave me a comment. As always, just say, hey, Akil, I like these sort of things. Keep them coming. These type of follow the trade videos. And of course, if not, just say, hey, Akil, I don't like this, but just add something to your criticism. Don't just say, hey, Akil, I don't like these videos. Tell me why. That way I know what I can improve for next time. So I'm going to go ahead. Got some Olive Garden dessert waiting for me. Going to go watch probably some Walking Dead or some type of show with Gotham, maybe with the wife. And until next time, plan your trade your plan. We'll come back in the markets and look for another trading opportunity.